Apple just had the greatest financial quarter in corporate history. $143 billion in a single 3-month period. Record profits. Record iPhone sales. Record services revenue. The stock hit an all-time high. And then Tim Cook announced he was leaving. That is not all. While Apple was celebrating those record numbers, a quiet crisis was unfolding behind the scenes. Their biggest bet for the future had completely flopped. Siri, the AI assistant Apple promised would change everything, was 2 full years behind every competitor on the market. And here is the detail that will genuinely shock you. To fix that failure, Apple, the most secretive, most control-obsessed company in the world, had to call Google for help. Apple, using Google technology to save its own product. This is the real Apple story of 2026. A company worth $4.3 trillion, simultaneously at the peak of its financial power and facing some of the most serious challenges in its history. Let's break all of it down. Let's start with the numbers, because they are extraordinary. Apple's fiscal first quarter of 2026, the holiday quarter ending December 2025, produced $143.8 billion in revenue. That is a 16% increase over the previous year. Net profit came in at $42.1 billion. iPhone revenue alone hit $85.3 billion in a single quarter. Services, the App Store, Apple Music, iCloud, Apple Pay, generated $30 billion. Every single one of those figures was an all-time record. And the momentum did not stop there. In the second quarter of 2026, Apple posted $111.2 billion in revenue, a 16.6% jump year-over-year. Earnings per share rose 22%. CFO Kevin Parekh called the iPhone 17 family the most popular lineup in the company's history. With numbers like that, it is no surprise the stock surged. Apple hit an all-time closing high on June 4th, 2026. The market cap crossed $4.3 trillion. Apple is not just the most valuable company in America. At $4 trillion, it is worth more than the entire GDP of Germany. To put that number in perspective, when Tim Cook took over from Steve Jobs in 2011, Apple was worth $350 billion. Under Cook's leadership, the company grew its market cap by over 11 times. That is one of the greatest wealth creation runs in corporate history. Which is exactly why his announcement on April 20th, 2026 hit the market like a thunderclap. After nearly 15 years as CEO, Tim Cook announced he was stepping down. Effective September 1st, 2026, Apple would have a new chief executive for the first time in a decade and a half. Cook will transition to executive chairman, still involved, but no longer running day-to-day operations. His replacement is John Ternus, 50 years old, currently Apple's senior vice president of hardware engineering. Ternus has been at Apple for 25 years. He oversaw the iPhone 17, the Apple Watch Ultra, and the historic Apple Silicon transition away from Intel chips. WWDC 2026 on June 8th was Tim Cook's final keynote as CEO. He has attended every single one for 15 years. And in a fitting twist of fate, his last keynote was the one where Apple had to publicly admit that its AI strategy had failed and announce a complete reset. To understand why that matters, you need to go back to WWDC 2024. That is when Apple took the stage and made a bold promise. They announced Apple Intelligence, an AI system built into every Apple device that would make Siri dramatically smarter, more context-aware, and capable of multi-step reasoning across your apps. The audience was electric. Investors pushed the stock higher. Apple had positioned itself as the company that would bring AI to the masses. Private, secure, built into the device you already own. It was a compelling vision. And then almost nothing happened. Months passed. The promised smarter Siri did not materialize. While OpenAI launched GPT, for then GPT-5. While Google Gemini became genuinely useful. While Microsoft embedded Copilot into everything. Siri remained the same frustrating assistant that mishears you and opens the wrong app. The tech press turned on Apple hard. One industry analyst, Dan Newman from Futurum Group, went on CNBC and called Apple Intelligence one of the, quote, big black eyes of Tim Cook's entire tenure. That is a stunning thing to say about the CEO of a $4 trillion company. TechCrunch ran a headline ahead of WWDC 2026 that said simply, Apple plays catch-up. The structure of the keynote told the whole story. Instead of leading with exciting new features, Apple led with fixes, corrections, apologies wrapped in product language. And the most revealing admission of all, Apple had quietly partnered with Google in January 2026 to license a custom version of Google's Gemini AI model to rebuild Siri from scratch. The new product is called Siri AI. It is conversational, context-aware, and capable of multi-step reasoning across every Apple device. Think about what that means. Apple, the company that spent decades positioning itself as the privacy-first alternative to Google, is now running Google AI inside every iPhone, iPad, Mac, Apple Watch, and the Vision Pro it sells. Privacy, apparently, has limits. To be fair, Apple's Craig Federighi tried to address that tension directly. He stated that privacy in AI is non-negotiable and unveiled what Apple calls private cloud compute, a system designed to process AI requests without Apple or Google ever seeing your data. Whether that promise holds up to scrutiny remains to be seen. There's also a catch that most headlines glossed over. Siri AI will not be available in the European Union or China at launch. Regulatory restrictions in both markets mean hundreds of millions of Apple users will not get the company's flagship AI feature when it ships. And speaking of regulation, Apple is fighting a war on multiple legal fronts simultaneously. The biggest is the Department of Justice antitrust case that was filed in March 2024. The DOJ, joined by 16 state attorneys general, is alleging that Apple illegally maintains a smartphone monopoly. Their core argument: Apple deliberately makes iPhones less compatible with competing services, hardware, and apps to trap users inside the Apple ecosystem. The most pointed example is iMessage. The DOJ says Apple intentionally kept iMessage off Android to make iPhone-to-Android conversations look worse, those infamous green bubbles. As of June 2026, the case is deep in the discovery phase. Both sides are fighting over documents. There is no trial date set. Apple is demanding the DOJ produce internal documents from 14 federal agencies. This case could drag on for years. But the DOJ case is not Apple's only legal headache. There is an active antitrust class action over iCloud storage pricing. There is a Dutch App Store case working through the European Court of Justice that could cost Apple up to 637 million euros. Switzerland has launched a separate probe into Apple Pay and NFC access. And in India, Apple's most important growth market, the government has proposed an antitrust law that could result in a fine of $38 billion. Apple challenged it, but the case is ongoing. $38 billion is not a rounding error. That is nearly one full quarter of profit. Then there is the settlement that got surprisingly little coverage. In May 2026, Apple sought court approval for a $250 million class action settlement related to its delayed and underperforming AI and Siri promises. In other words, Apple is paying $250 million because it did not deliver the AI features it publicly promised. $250 million to settle claims that Siri did not work as advertised. That number is almost nothing to a company generating $42 billion in quarterly profit. But the symbolism is damaging. It is an admission, in a language of dollars, that Apple overpromised and underdelivered on AI. So what does all of this mean for Apple's future? The bull case is straightforward. The company has $4 trillion in market cap for a reason. It generates over $123 billion in free cash flow every year. Its hardware moat, 1.8 billion active devices, is essentially unassailable. Wall Street analysts are mostly still bullish. Wedbush's Dan Ives, one of the most prominent Apple analysts on the street, has a price target of $350 per share. The consensus target is $316. At those levels, Apple still has significant room to run. The optimistic scenario for John Ternus, the incoming CEO, is a company already firing on all cylinders, with a rebuilt AI strategy, a new product pipeline, and the strongest balance sheet in corporate America. He is walking into an incredibly powerful position. The bear case is harder to dismiss. Apple missed the first AI wave entirely. While Microsoft gained billions in new enterprise customers through Copilot, and while Google rebuilt its reputation with Gemini, Apple spent 2 years promising a Siri upgrade that never arrived. That is 2 years of market share in AI that Apple will never get back. And the irony cuts deep. The company that convinced the world it was the privacy-first alternative to Silicon Valley's data-hungry giants is now running Google AI on every device it sells. The positioning that Apple built its brand on for 15 years has been quietly compromised. Leadership transitions are also genuine risks. Tim Cook was a once-in-a-generation operational genius. He took Steve Jobs' vision and turned into the most profitable supply chain and retail ecosystem in history. John Ternus is an outstanding hardware engineer. But running Apple's hardware engineering division is a very different skill set than running a $4 trillion global corporation. The real question Apple faces going into the second half of 2026 is simple. Can a company that makes most of its money selling premium hardware remain dominant in a world where AI is becoming the operating system that everything else runs on? Or will the next generation of consumers define themselves by which AI they use, not which phone they hold? Apple's answer to that question will define the next decade of the company. The Gemini-powered Siri AI is a serious attempt at an answer, but is an answer that arrived 2 years late, required help from a historic rival, and still will not be available to hundreds of millions of users when it launches. This is Apple in 2026, the most profitable company in history, sitting on a $4 trillion valuation, having just posted the greatest earnings quarter any corporation has ever produced, and quietly scrambling to catch up to competitors half its size. Record profits, existential questions, and a CEO succession happening in real time. If you want to follow the biggest money stories happening right now, the moments where record numbers and hidden crises collide, subscribe to Money Stories today. Hit that notification bell so you never miss the next one. Because in 2026, the drama is just getting started.